Hey everybody, DayTraderRockStar here, and I got a great video for you. Every day I'm trading the markets, broadcasting the markets live on Day Trading Radio. I switch between stocks, options, and futures, but the real money can be made in futures because it doesn't really matter where the futures are going, and the opportunities are there. And the only thing that kind of holds us back is missing the opportunities, not being prepared or focused enough. I want to make this video a written in stone tablet of the rules to make money in the futures, trading the MES, ES, Dow futures, NASDAQ, or any combination. I'm going to go over the techniques. I'm going to go over the chart. It's going to be concise. It's going to be the manifesto to making money in the markets. I guarantee you're going to love this video. It's a lot of stuff I teach every day on the show, but it's going to be concise. I'm not going to make it too long, but it's important. It's for myself because I every day, could go back, take a look at these charts, and see the opportunities. And what I'll find out is I didn't pull the trigger because I wasn't mentally prepared, or I just didn't see it fast enough because I was distracted doing something else, probably for the show. So once you could focus and apply these rules, there is no doubt that you're going to make a lot of money. As much money as you're willing to risk. We'll go into that a bit too. And I want to open up this, kind of get a dialogue going. I'm going to add some things to the site that are really going to focus on our futures trading because the opportunities are there every day. There's one or two good opportunities to make some good money. And, this is what we're going to go over today. So I want to get started with this. I actually have the S&P chart right here, but I have a lot of other things that we're going to go over fast just to kind of get you up to date, up to speed, especially if you're a beginner. Let's start right from the beginning. A lot of people know me out there as DayTraderRockStar. I run Day Trading Radio. It's an online trading site that I've been running since 2007. I've been a professional trader since 1996. And I love teaching the markets. Like I said, I'm very active every day. We're in on DayTradingRadio.com. I'm in to the office probably around 8 o'clock, which it should be a little bit earlier. If I just start mentioning that, it should be a little bit earlier because I lose a lot of, we miss a lot of opportunities when we are not there early morning. Considering the market and a lot of the stock trades or the stocks open up at 4 o'clock a.m. Eastern Standard Time. Futures around the clock. And, and again, for beginners, there's a lot of little things you're going to have to learn. Over time, it's going to make you a better trader, understanding when European futures open, or European markets open up, and that volume comes into the market. And we usually have great opportunities in futures trading around 3 o'clock, 3:30. Same thing, at our pre-market time frame, different time frames when news comes out, 8:30 to the 9:30. You learn about the 950 reversal, how to recognize relative strength in the first half hour of the day. So all these things are going to add and help you put together the pieces. It's going to be very simple. It's really, really simple when we get down to it. That's what I love about it, and I get so excited about it. But again, as simple as it is, you have to develop enough confidence in your methodology that you're going to pull the trigger. Now, today we're going to learn about the divergence and maybe the triple stochastic flag, but mostly it's going to be about the divergence on the 5-minute time frame. I was here earlier in the day working on my old Rockbot, and I was actually I set up the Rockbot on a 60-minute time frame and put the Rockbot on a 60-minute divergence, and that divergence, I ran it for the month. I think it had, actually, it froze up before it got through the back testing on the month, but I got almost to a month, and it was really impressive to see what it was. I think it was 18 successful trades, 4 losers, but I had it at pretty good, trailing stop where it was. But it really shows you how the time frames make a big difference. So, again, there's so much I want to share with you, and I think as a beginner you could get overwhelmed easily here because I'll be talking time frames, I'll be talking indicators, and a lot of these things are going to be kind of hard. It comes second nature to a lot of people because we deal with it every day. So you're gonna have a little trust. You got to do your homework, and once you start doing that, you'll find opportunities here, and this will lead to a freedom you've never had before. You could travel around the world and stuff. So let's get back to it. Let's not get too carried away here. And I wanted to actually. Oh, I don't want to mess this up here. Hold on. Let me pause this. All right, we left off here just talking about the divergence trade. The other most consistent money-making trades is a 200 EMA breakdown, channel line bounce, and oversold stochastic channel line bounce. A lot of things to do with channel lines, trend lines, etc. And in the top here, you can actually qualify these as two scalping setups. The divergence setup, the triple stochastic flag is a scalp, and these could be easily swing trades or position trades. But they're all very, very good. That's why I have them listed. This is from an old webinar I did, or an old webinar I did for NinjaTrader. So I actually will put a link in the video so you can download this webinar and some videos that go along with it. It'll be found on the Nyack Nyack. I told my old pirate radio days. Day Trading Radio Yahoo group will be on there. Just go there. So this is what we're going to have to go over today, just to make sure our criteria is there. We're going to have our order entry criteria. That means tell us what we're going to need to push that button. What do I want to see on the charts to push that button? How am I going to get out? When am I going to get out? Profit area criteria. Automatic stop I'm going to show you where you put your stop. The risk management for the method. How and when to increase your position size. How to set up your charts. I want to show you that. Tools for the trade. And again, starting balance is probably one of the more important things. With discounted brokers these days, and there's a few good ones out there. I mean, I use the NinjaTrader, which is a $500 margin for the S&P ES for the ES contract, and it's only $50 for the MES. So you're talking, being able to take a position for a few $100s, and I believe you could open up your account for $500. So you could actually, your starting balance, I would recommend to be over $2,000. But it could go, you could probably get away with, 1,000 or so. It's always harder when you don't have that money, that gap that you can rely on. The more money you have, the easier it is to make money. So a lot of people want to come in. John, I just have $1,000. What do I do? I want to get into something. Should I get into Shiba? Should I get into? I said no. I mean, come on. These are they're gambles. This is actually going to make you money. You're going to see. You're going to be, wow, this is right. But what's the downside? There's always a downside, right? Well, we're going to go over that. So the divergence, just to catch you up on the divergence. Divergence is really where we're going to be using the oscillator, the stochastic oscillator. Stochastics. It was developed in the 1950s by George Lane, and definitely do some research on it. Developed by George Lane in the late 1950s, stochastic oscillator is a momentum indicator and shows the location of the close relative to the high-low range over a set number of periods. So what that means is that the stochastics on our chart, if I go to my chart here, and this is part of the lesson today, is we're how to set these stochastics up. The top, I always go from fast to slow. And when I like to see your charts set up like this is how you're going to set up your charts. If you're going to trade this way and use these indicators, you're going to have 4 stochastic bands here. Fast, and full. This is 9-3, this is 14-3, this is 44, and this is 60-10-1. And it could be a fast 60-10. It's a superstition for me to put it in like this, and I'll tell the story one day. So I use this full 60-10-1, but you don't have to. And that's the way I make them different colors, just so it's easier enough. And normally in stochastics, you're seeing 2 lines, and if I scroll over the line, you can actually see it. The one is called the signal line. So you have the percentage K and the percentage D. Percentage D is your signal line. It's also moving average. It applies the moving average on the K, just kind of smooth it out. And again, probably over a lot of people's heads already. Don't worry about it. We'll go more into detail. But the stochastics are a momentum, which is measuring how the price is closing over how many periods. So in this time, over 9 periods. Fast stochastic 14.3 over 14 periods. Fast 40 over 40 periods. So it's measuring and it's giving you kind of an average where that candle was relatively closing compared to the last how many periods you have. So when you get overbought, it's closing near the 100% mark, the highest part of the candle. If it gets down to 0, it's at the lowest part of the candle. And this is where you tend to see people use stochastics as overbought and oversold. We use stochastics as divergences, where we want to see the price doing one thing, but the stochastics doing the opposite thing. And that gives you the huge moves. When you have, and I could spot, I could spot a stochastic, like it's a, like it's a woodpecker in the woods. So anyway, you're looking at the price came down here, bounced. I'm just looking at it right now, and you could see the steepness, the angle here, the degrees of this higher low versus where the price was a little lower low if it was a double bottom. And that's a great divergence. And when you see divergences like that, 9 out of 10 times, you tend to see explosive moves. So that is what we're trading for. That's what we're going to trade. Now you have the different time frames. This is on you could find this on the 1 minute time frame, or you can find it on the 5 minute time frame. I recommend the 5 minute time frame because it gives you better setups, and the trades last longer. And if they last longer, then that makes sense that they actually have bigger chance to go. Instead of going for 1 or 2 points, you might be going for 5 to 7 points. The rule I always use, and the kind you could use it if you want, I always say a divergence rotation from overbought to oversold takes 7 candles. So it would take 7 minutes on a 1 minute time frame for a stock to get overbought to oversold. On the 5 minute, 5 to 7 candles, I should say. I say 7 candles. It's actually 5 to 7 candles. 5 to 7 candles, depending on how the speed. On the 5 minute, it would be 25 minutes to 35 minutes. So you have a lot more time, and that gives the market a lot more time to move up instead of getting these little 1 minute moves where you have to be a little sharper in your game. So I prefer that you learn using the 5 minute, you trade using the 5 minutes. Not as exciting, it doesn't give you as many great setups, but it is more reliable, and it gives you bigger moves. So back over here, you can see now that our divergence here's your price. Price makes a low, bounces, makes a lower low. The stochastics here make a low. But as the price comes back down and makes a lower low, the stochastics is actually making a higher low. On the other side of the trade is the bearish divergence, and the bearish divergence, same thing. Price is making a higher high, stochastics make the lower high. It's just the opposite from this. You just picture this: the prices are making lows. For a bearish divergence, the prices would actually be climbing and making highs. Here's the climbing and making highs while the stochastics fail to get to that high. Normally, stochastic would come up here with the first high to the second, and then pull back, and then start moving back up with the price, but it fails, and that's your divergence. Normally, it would continue to move higher relative to the previous move up. So this is really key to understand that. So we want our order criteria now that we kind of got everyone up to speed of what we're looking for. Our order criteria. So we're going to go down. I'm going to go back down here to our order criteria. And this is our buy side low entry. Stage 1, the divergence should have a stochastic under 20. So your first move down here, you see down here, is your stochastic should be under the 20 line. This is on a buy signal. It means you're oversold and you're going to be looking to move back up. So the price comes down, gets oversold, and gets that bounce, initial bounce. That's part 1 of stage 1 of the low should bounce the stochastics back above 20. So you'd like to have this under 20, then this bouncing up back above that 20 line before failing and heading back down as the price fails and makes new lows. So the price is making new lows, but what you see here is actually we made a higher low in stochastics. That's our divergence. Inside a downward channel or pattern like this is very powerful, and it brings us out. very strong. So that's basically it. Same time the stochastics, hold the 20 line and turn back up, put in a higher low in the stochastics. Optional but recommended are that the 5-minute time frame, if this is on a 1-minute time frame, what I would say even better is whatever time frame you're using, make sure the next time frame higher is trending in the direction of your trade. So in this case, this is a buy signal. We want to make sure that 5-minute, if this is a 1-minute time frame, we want to make sure the 5-minute is coming off the lows and starting to rotate up. Very important. So that's, even so it says optional but recommended. 5-minute, 60-minute, and the 60-minute if you're trading the 5-minute divergence. So you want your next time frame, which will be the 60. So we pay attention to the 1-minute, the 5-minute, the 60, and the daily. That's basically it. We don't want to complicate things too much. It works. And that's as much as you really want to. That's the best you're going to get. Something that works so great. Again, stage 1, just a different example. You're getting a low here. Stage 1, you get a low. Stock starts to bounce back up. It brings us back above the 20 level. But what happens is the price comes back down. And you can see it's lower than this low, but the stochastics start to turn back up right here. So right at this point, with this candle thing start to turn back up, look at the big move you get. Really defines a good bottom. Back over here, this is on Verizon. This happens in individual stocks too. This is the same exact setup, but we're doing it on a daily chart. You can do it on a 60-minute time frame or a 5-minute time frame and a 1-minute time frame. That's the ones we're going to be dealing with. But that's the same look you want. Here it happens over here. This is what we call a double bottom divergence, where the price doesn't make a low. It just makes a double bottom. It equals the pullback of the previous low. But the stochastics at the time are turning way up and much higher than where the previous level was. So that's what we call a double bottom divergence. We'll touch fast on the sell side divergence. And again, it's the same thing down here. Stage 1, we have a high. And then we have a higher high, but the stochastics fail to get back above the 80 line. Instead of the 20 line, we're working with the 80 line. All right, so at the same time. And I'll let you dwell on that. We don't take as many shorts because the markets are very strong and they tend to move higher. So you always want to be with the trend. But there will be days where you might want to take some shorts on this. So the criteria is the same, just the opposite. Here's another example. Here's your high, the pullback, the higher high, and the second stage fails. Now it pulls back. Now these are all dependent on the time frame. We always talk about the rotation, maybe a 5 to 7 day rotation. In this case, we're talking about a daily time frame. So even though it's a daily, you might say, well, it didn't really work that well. Well, it did work. It worked fine. It's not about what you think the market should give you. It's what the market's going to give you, and you have to recognize that and take it and move on. There'll be great setups and there will be good setups. All right. It's best to take profits in both of them and not don't get greedy, because every so often you could get caught with a little pop. Now this is where it gets really simple, because when we deal with any entry that we take is based off that lower low. So our stop criteria, risk management, how to determine a stop loss, is 1 tick under that candle bar low that represents that divergence. 1 tick underneath that. All right, so very simple, easy. You don't have to mess with any weird complications. You get a divergence, you take a look at the second low, you put a stop 1 tick underneath that. Good to go. That's where you start off. After that, you're going to, either follow it up with a trailing stop, and we'll talk about that in a second. Now, I'm going to go over a few charts here just to kind of point out just some classic divergences so you get a good feel for it before we look at the live chart. So here's an example of a sell side divergence. You can see down here on my 9-3. Now 9-3, 14-3, the 44, the 60-10. You say, why do I need all 4 of them? Different strategies, but when we're talking about the trading in this video right now, we're going to be paying attention to the 9-3 and the 14-3. Preferably, you want to have a divergence set up on both of them. The 9-3 is less candles looking back, so it makes the oscillator a faster, more twitchy oscillator. The longer the period, the more gradual the move is, and so We don't want to go anything less than a 9.3 for me. So and again, because it's a faster time frame, the profits got to be taken off faster. If you're going to rely on that, on the 5 to 7 candle rule, when we get a divergence, you look 5 to 7 candles before maybe looking for a bounce or something, and that's how long it takes for this to get oversold. On the 5-minute chart, again, you're going to have a little bit more time. There's actually a nice little double bottom divergence here, from this low down to here, and we got a nice move up. I don't even mention that. Next page here, little divergence here. Another indicator I use is the reversal candles. So when we have a divergence and a reversal candle, which I'll show you the candles in a second, that increases the probability of the trade to be successful. So there's something that you have to add into your formula on determining what size you're going to take. And your standard size, just say if you're a beginner trader and you're trading the MES or the ES, the MES is going to give you less risk, where the ES 1 point movement will result in a $50 move per contract. The MES is 1/10 of that, so 1 point move will be $5. So you could actually cut that in half by trading multiple MESs. It'll be easier for you to trade those. That's why I recommend that. Lots of times you'll find that the ES might be too volatile. If this thing moves 5 points and you have just one contract, you're down $200, $300 in a matter of minutes. That could be pretty, especially for someone with an account size of $2,000 to $5,000. You're not looking at taking $300 losses on your trades. So that's why the MES is also good to kind of, learn to trade using something not as dangerous. So you have a reversal candle and you get a nice move up. Let's continue on. Let's just look here. All right, so let's talk about our candles and what are tools and what do I have on my chart. So when you want to set up and you're trading this way, you're going to have your main chart. Now, first of all, this is the Medved Trader. The Medved Trader you can probably find at medvedtrader.com. Excellent program for charts. Has all the indicators. It'll connect to most broker accounts and your different feeds and stuff. I highly recommend it. I've been using it since it was Quote Tracker back in the 90s. So I'm very familiar with the platform. I'm willing to share my template. It's actually my template is on Day Trading Radio's site somewhere, but I will post that link in the video also. That way, if you're using the charting program, you could just import my layout and it'll just open up as a layout. But if you want to do it yourself, very easily add indicators. You have your volume. You can put that anywhere on your chart you want. And in this case, it's probably not even that as important as the other things that I pay attention to. So we have the moving averages, the 20 EMA, the 50, and the 200 EMA. That's exponential moving averages. There's basic, standard, trader, moving average is really good. The 20 is very important, 50 and 200. Support and resistance lines are usually previous day high, low, opening, closing prices. Our stochastic bands, the fast, I don't have the 9.3 up there, the 9.3, the 14.3, the 44, and the 60-10-10. Actually, 60-10-10. I had a 60-10-1. You could use 60-10. I don't want to confuse people on the 60, the full. I would just do the fast stochastic 60-10 instead. We're not going to be using the 60 period during this video anyway, and that's for a more complex flag setup. So we'll discuss that, the range that you could use here in another video. Really, it's the 14.3 and the 9.3. The 9.3 is not on this chart right here, but believe me, you want to have the 9.3 on it. And then our candlestick counter. I used to have a candlestick counter. It's a little counter that you could put on your charts, and it tells you how long it takes for that candle to be completed. Because if you have a nice reversal candle, and you only have a couple seconds left in the candle, then you could pretty much say, hey, that's going to be one of my criteria is going to be met. I'm going to have a good reversal candle. I'm not going to have to worry about how the candle is going to end, and if it's going to bring in some triggers from outside the market. So that's something that not many people use, but I like using a candlestick counter. All right. Longer term divergences, like I said earlier, are found on the dailies. So this is a whole, after a divergence here, you had a whole month of upside. A divergence here, a whole month of upside. Divergence here, a good 7 to 10 days there. These are all on the daily. And look, does it come out all the time? This is May, this is November, and this is like in January. But these are the best trades. Now, we're going to take these type of trades and we're going to apply them to our 5-minute time frame, and we're going to take this. So maybe this might be at 9 o'clock, this might be at 1 o'clock, this might be at 3 o'clock. You get what I'm saying? 60-minute buy-side divergence is a little outside of our time, but a very powerful time frame. Love this time frame. I just did some scans on it. I got really good results off of it. Let me show you fast while I'm talking about it. The other chart I use is the TC2000 chart, where I tend to track the S&P 500 cash chart or the SPY. And again, excuse me, the 5-minute here is giving us a nice move here. So it's important that sometimes I rotate through charts. I'm not using using 2 charting services. One would do. But I like, bringing different looks to the show when I'm on. Here's a 1-minute divergence on the S&P. I'm just giving you examples of what we're looking for. Like, the important thing is the low, then a lower low or double bottom here, but a much higher stochastic rotation. I find the one back here is really nice. A low, a lower low, and a much higher stochastic rotation, a big pop. Now the overall trend seems to be down. So again, you get that pop, you got to take profits. That's probably number 2 and the most important thing. First is taking the trade. Second is taking the profits. How many times do you think that you're in the best spot, and the next thing you know, you're pulling back. You're back here basically break even. You're like, oh man, I had 3 or 4 points. Why didn't I take that? I want to wait for it to come back. Maybe you get a little bounce back up and then it rolls over again. So remember, the overall trend is going to determine how long you usually stay in your trade. If you have an upward trend and you catch a divergence on a pullback, that's really good. You could stay in there probably most of the day, and that's something you have to learn to identify. But anything that's in a kind of a downward trend, you're going to get nice moves, but you have to take profits. If you don't take profits, that's just not the name of the game. And that's rule number 2, Now with the divergence setup here, you could trade options on this. We're not going to focus on the options today. But you could trade weekly options that are expiring the same day near the strike price, and get big moves. Here we had a nice move. In some cases big moves. In some cases you get real nice moves. But enough to move the counter on the, if you're trading an option and it's maybe under $1, 20 or 30 cents. This thing could go from 20 cents to 30 cents. And a nice divergence move. And that's, percentage-wise, that's a damn good move compared to, you might not think about looking at it, but there's lots of great opportunities out there with the options that are cheap. This is what I call adding, overlaying other indicators over to your main divergence. So I'm always working what's called the 5 indicator methodology. Let me show you what that is about, because I didn't really discuss that. I think I have a graph here of it. Oh, here it is. All right, so here's my stochastics are number 1. Then we have trend lines, price that's on a confirmed trend line is an indicator. Moving averages indicator. Is a recognizable pattern. That's an indicator for me. Support and resistance and reversal candles. So this is kind of what I'm looking for. 1, 2, 3 patterns and 3 channel trend line bounces. Any type of moving average, any type of wedge channels, flags or pennants that I could key in on. And all this is working with the stochastic. So now we go back, if I could find that same chart. I think that was adding other indicators. So I might see a bigger, you can't see these 2 trend lines here. 1, 2, 3. So that's a big 1, 2, 3 pattern. Or there's actually a trend line right here. So we have these zones. This was a divergence, but it also might have been a lower trend line. So that's one thing we like. Any type of trend line breakout and retest of the trend line, and it happens with a divergence, and it happens maybe with another support line. So this is a retracement. It's a nice pullback, a little bounce, pullback, a second retracement of that trend line, and it looks like a reversal candle was there. And then from that point on, that was really just a nice move. And back here, another divergence. So the divergence here, easy to see the divergence. Adding other things to the divergence helps. So divergence here, divergence here, divergence here. Simple. 1, 2, 1, 2, 1, 2. Price versus stochastics. There's other things lined up. You have other indicators lining up with you. That gives you more reason to add to your trade. All right. And the other things, reversal candles. Let's just go over those fast. Just a few of them. The hammer, shooting star, which is kind of reverse of a hammer. That's a topping pattern. This is kind of a bottoming pattern. Then we have the bullish engulfing, where you start lower and higher. You're engulfing that. That's usually a bottoming pattern, which comes down and reverses. And the bearish engulfing, up at the top, you start off higher but you end lower, and you engulf the previous body. So these are very classic candles that everyone should know, and it's easy enough to apply to that. I think there's a piercing pattern and a dark cloud cover. Real exciting. Basically the same stuff. Everything starts higher and ends lower, or starts lower and ends higher. So that's the key. These reversals. Showing the 5-minute rotation in favor of the 1-minute setup. All right. So here we had a divergence setup, I believe, showing a 5-minute rotation on a divergence setup, and it gave us 64 cents in the SPY. 64. It's a 0.25% move, but on an option that we were just talking, it gave me 27 cents when it was trading around 80 cents. It went up to like $1.10. 30% move versus 0.25. Not even that's a quarter of 1%. So you see how important the divergences are. You might not see a lot here on the SPY, but if you get the right weekly call option that's timed properly with this, you could get 30% moves. An excellent way of trading that. We also have the tradeometer too. Not that this section matters much, but I did a little comparison. I said, all right, if you just put a certain amount of money in each different vehicle to trade, be it a SPY, be it the options, be it maybe an ETF, and then just buy the same dollar amount in whatever they were offering, and see what the return would be across the board from the move that the divergence gave, and see which one gave you the best. So I did that. I actually broke that down for us a little here, and then these were the kind of results. So I bought. Actually, let's see. How did I break it down? I think what I could get with $5,000. All right, discount broker, E-mini contract, shop you around, low as $500 to $8 futures, and Ninja, you could pay $3,600 interactive brokers. 2 contracts. So it was 2 contracts. SPY shares, it was 22 shares. SPY options, it was like 70 times 100. Maybe it was 100 or 20 contracts. It was 20 contracts. So that's how I broke it down, and then the results were basically this. So it was the futures that gave us the biggest bang for the buck, basically, and the options actually held in there really good too. They both gave us a return of $200 on the move. The SPY, having any part of the SPY, it's just not worth it. It's just, a 0.15% move, 33 cents you get off that divergence. You have to be in it a lot to profit from this. So this is definitely the way to go. So, now that we know what we're looking for, we're going to go live now. We're going to go actually live I'm live doing this, but I'm actually going to bring you to the chart from last week, because I do this every week. I like to go through the chart and really just kind of confirm, should I have taken that trade? And this is basically going to be hands-on. This is what you're going to learn from. You're going to learn it right here. You're going to learn the whole style of trading right now in this next few moments. So basically, I'm just looking at the S&P futures. Now, this is the Ninja Trader chart. I actually have a divergence spot. It's called the Rock Bot, and it's offered to members of Day Trading Radio. It's part of their lifetime membership. They could actually get the code and run it too. But there's also a channel that we have at Day Trading Radio. Members get to watch. It's called the Rock Bot channel, and it runs and identifies divergences. So it's a great tool to have if you're a member. But I use this just to kind of, I wrote the program. I said, the methodology is sound. I really believe in it. So I took it all. I designed a little program that identifies what I'm looking for on the chart, and it will take the trade for me. I don't recommend it taking the trade for you because every trade is different, and it really depends on what the other time frames are, what the news is surrounding the trade. I just don't feel comfortable being hands off with not knowing the overall market condition, because I like to understand to take my profits faster in a downtrending market, or not look for as big as a profit maybe, versus letting this be automated. Excuse me. It does identify them well, but at that point, I think like right here, yes, I would have taken that. Now this is what I'm just starting off. I'm saying, all right, I probably didn't take this one. And I should have taken it because it was such a textbook divergence. You can see it right here. You can see this lower low here, the low, the higher low, the low, the lower low. I mean, it was a textbook divergence. And then we had actually the 60-10 here, just getting over. That's my 5-minute time frame. That's something that, again, you have to learn. But right now we're just looking at our 9-3, 14-3 divergence there. Add a piercing pattern to that. Big reversal candle, basically. And our next time frame, in the next time frame, I calculated out that the 5-minute, well, if you're using we're on the 5-minute chart. If I was using the 1 minute, this is actually the 5-minute chart right now, which I'm going to say that's going to be going out to the 60 period then. Considering this is the 5-minute, that's all I want. I'm not really worried about the 60 period down here or the 60-10. I am not worried about that. If this was the 1 minute, then I'd be looking down here and making sure that the 60-10 on the 1 minute will be kind of mirroring the 5 minute. So if this was on the 1 minute, this would mean that the 5 minute is just starting to turn back up. And that would give me a lot of confidence to hold this one longer than maybe these little pops. And this one did. It did break basically a little bit further before coming in and capturing the trailing stop. So just kind of grinding back. And let's start from here. And I want to see sometimes maybe the bot missed a trade, and I want to sometimes find out why that happened. Now Friday we had. Was this Friday? This was Thursday going into Friday. With the new variant, we really sold off hard. Overnight, it sold off overnight. It was straight down. There was nothing to be seen there. I do have a divergence signal here, and yes, you see this low here? You see that low right here? So it qualifies. This blue line here represents our 20 line. Stochastics are starting off with a low, and the stochastics under the 20 line. The bounce, which starts to bounce here, drives the stochastics up here above that 20 line to midpoint around 41.50. I just want to get it back above the 20. I want a big divergence. I don't like these flat line divergences. But the higher we get, and then the price snaps back down and takes out the lows. Next candle is up and starts to turn back up and really starts to prove that divergence, meaning that they didn't have any power to get down back to where the stochastics were back here. And the price is already starting to head back up. So that was a really good divergence too. And again, on the 5-minute time frame, which is key. 1 minute probably going to be too aggressive for beginner traders out there. It's going to be a little tougher on the 1 minute, and it won't be as exciting because this, like I said, this might happen 3 times a day. But if you have good ones, you'll learn to put on a lot of size onto something, a good divergence, and when those times come, you can make a good amount of money. I mean, if you had 10 contracts, 10 on the ES contract off of it, and just got a couple points, that's all I want. A couple good points, which is easy on a divergence. Every divergence is giving us that. All we have to do is be in front of the computer for it when it happens. That's the hard part, is being there. Here's a little divergence here. You can see this one kind of dropped back down before heading back up and really chopping around sideways. And this is also the other thing I have to put out there, is that you have to decide where you want to take these. I prefer taking them, between. Usually we start to see action, earlier in the morning, 4 o'clock, 5 o'clock into our open. But until till the market closes, I don't like to overnight trade it. Sometimes it's too choppy. Just as exactly what happened. This has happened right around 3 in the morning. This little European Open flash, and it's just choppy. So it just doesn't work on divergences. But when there's more activity in the market, like at 2 o'clock here, beautiful candlestick, identifies divergence, it's in, and it runs it up. And it probably could have took it all away. But again, this is just set up just to identify divergences and to follow it up very tight. But as you can see, you'll learn more and more about divergences, how they work. Even though this was not, it looks like a sloppy divergence. It was definitely a higher stochastic rotation, but there's no lower low, you're saying. Well, the closing prices are just about what we want to see here. So I pay attention to the lowest closing price, and that becomes the line in the sand. And when we start to see the price dip down below that but cross back up and the stochastics hold up, I call that a relative divergence. It still looks good. It's like a double bottom. This was a regular divergence. It was an early one. But this is strong. It took a couple candles, and it went all the way. This is what the power of a divergence. That's why you don't want to miss any here. Here there was a divergence. You had a low. We started ticking down, and right at this point here, we're making a lower low. Stochastics here turn up. It didn't trigger it. For whatever reason, it was right at 9:30 too. Right at 9:30. So right at the open, we took off. And, then we went into the first pullback, another divergence, and took off. And then before that, the beautiful divergence here and a big pop. This is the chart that I'm typically using when I'm trading during the day live on the show, DayTraderRadio.com. All right. This is the chart I use a lot on the show, so I wanted to just kind of go through this one more time so you get familiar with what to look for on this type of setup. This is only going to be on, and I typically have it on the 1 minute time frame, but I'm going to definitely have two charts up now, one for the 1 minute and one for the 5 minute. And I can scan through these pretty fast, and what I noticed here, I already scanned through it once, and I'm just going to go through it again. I'm looking at the stochastics here, the 60. We see a divergence right here. That's a 5 minute divergence right there, and it's a nice move up, and it would take profit. So all right, check that out. Would have taken that trade. I mean, that's something I probably would have taken. That's something I want to take in the future. So circle that. Just looking around, zooming out, going out here. Looks like there was a nice little rally here. Everything was holding really strong up against the 20 period moving average. Probably some good bull flag setups, 2020 bull flags. But that's not what we're looking for right now. We're just seeing if there's any 60-minute divergences. Now, here, it does look like there was this type of multiple bottom closing price divergence. You can see, and we held up here, even though the price came down under that level. Right here, So where the price is, and it normally is, and where this is starting to turn back up, it felt suspicious of a divergence. Plus, I had this big reversal candle. Now, there was a good reversal candle there. There was one here, piercing pattern. There was one here. And look at back here, there was a divergence. Nice divergence right here, 60-minute divergence. And look at the big candles. So real good candles. And what I call the reversal candle is the tail has to be twice the length of the body. All right? The skinny tail has to be at least twice the size of the body. And you can see these are big candles in both directions, but they are leaving some big lower bars here. And the stochastics are starting to turn up on that. And that's just a good sign overall. And we would consider that a reversal candle. And then I'm just scrolling back a little bit more. I would be looking for one here, but it looks too flat. It doesn't qualify. And the important thing is make sure you're taking the ones that qualify. And it could go through, a day maybe. I'm not going to try to listen to the overnight or watch the overnight as much. Here's an early morning drop. Nothing there. But again, we will have the Rockbot running. The Rockbot will identify these in a faster and more efficient way, as I showed. But I'm just going back multiple days now. Just to see if there's anything outstanding, because you'll see them. I want you to see them. I want you to say, wow, that was a good one. And what made it a good one, Was it an obvious steep divergence? I like to call them steep divergences. And when they show up, they rock. This was almost one. I mean, there was a mathematical divergence on this. Lower low. Slightly higher high, and that really was the bottom here, and that's at 5, a little after 5 in the morning. That's borderline. It went under the 20 line. I say we have to kind of hold our standards a little bit higher to get that higher divergence. The higher the steeper this line here is, the better divergence. But that's technically, that is one, and technically it worked out good on the chart. Here is a nice double bottom divergence. Price came down. It's actually maybe even a little bit lower. Two big candles, but a higher stochastic rotation on the 9.3 and on the 14.3. Very nice. That was a buy here. And from that point on, it's been a nice move. And on average, 70 to 70. Maybe 5 to 7 points, that is, on these 5-minute trades. So think about that, 5 to 7 points on these 5-minute setups on average. So we're getting maybe 5 to 7 candle on the upside on the 5-minute, which gives us plenty of time, not a big rush, not on the edge of our seat. We have a nice reversal candle where we have our stops. And at this point, depending on how you took this, if you put things, you start to do the math in your head, just say, you have a rule that you're only going to take a couple ES trades, take a couple ES contracts, I should say, on a really good double bottom divergence with a reversal candle. And you say you're going to take 2 contracts. And a discount margin broker, you get those for $500. So I thought you're putting up $1,000. And you got 2 contracts of the ES. E-mini contracts, ES, and say you get 4 points. Let's break it down. 4 points. So each ES contract is $50. So that's $200 a contract. That's $400. $400 that trade would be worth to you. That little move right here. $400 over here if you caught 4 points on it, which is probably not that. It went to 71. To 82. That's 10 points. No problem. Divergence there. And then you had one over here, right? We marked off. Oh, we have to go back further. But you get the point. I mean, and those where we have to, learn to step up a bit into your contracts. Beginner traders, that is. People who don't have a lot of money to trade with, and they're worried about, being too reckless. You have to be super disciplined in this game. You can't be going for these, crazy crypto moonshots and stuff like that if you want to learn how to make consistent money. Because those, you get lucky sometimes on penny stocks. You get lucky on a lot of different things, but it's not consistent. This, if you recognize it, you could get really good with it. You could actually, build a business around it. That's why I always call this as my business plan. The business plan is to identify the criteria, take the criteria. The missing parts are not being able to focus and and pull the trigger at the right time, or just missing them totally. So this is all in part practice to get that better, and review to get that better. This is a beautiful double bottom divergence right here. I definitely probably would have taken the 2 ES trades on this. This was holding up really good. It started turning back up. That was off to the races. I mean, and again, that moved so fast at 52 to 72. 20 points. 20 points. You're just looking for 5 points. 4. I mean, you could get 10 points. Yeah. We'll just take 10 points. Wow, that's a nice that's a beautiful divergence right there. Double bottom, high, steep rotation, and off to the races. I always tell you, show me a divergence like this, and I'll show you, every time an explosive move out. So why wouldn't you just say, hey, you know what, this guy is onto something? Can't be that easy, but it's not. Believe me, it's never that easy. But you have to surround yourself in the right time, right place, right conditions, and then strike when everything is lined up perfectly. You need to take that position. You need it. You need to take it. Another divergence here. What do you see? You see a higher stochastic rotation, a lower low on the price, holding above the 20 line, and then boom. Sound effects, Johnny. Sound effects. I mean, these are the moves that we're getting off of these divergences. There's a little double bottom divergence here. Probably would have taken that. And yeah, it didn't get as big a move here. And maybe you get in late on this, say 46.50. Well, maybe it just gave you 2 points. At that point, it starts pulling back and you break even again. At one point you have to recognize what trend, where the trend is. Trend is down, so your pops are probably going to be sold into. And once you start to get to that point where there's no emotion in the trade, you're not rooting for one side or another. You're just playing the game. You're going to work. You understand the rules of the game. There's no miracles here. You're not going to just get in and it's going to be the bottom here. Most likely it's going to get a little pop and it's going to roll over again. But it is going to give you the area to get that opportunity to get that pop. Wow, look at this one over here. I mean, they're popping out at me like, well, I don't know. I don't know what they're popping out like. But this is the passion you want to have. I mean, you got to understand how good this is. How good this system is. The weak link is us, All right, it really is. Reversal candle, divergence, high 12%, 14% angle here on the stochastic rotation. That is textbook all over that. Problem is, it's 3:30 in the morning. There's your problem. That's why you have the rock bot to wake you up. Yeah, well, I think you got the picture though, right? I mean, it's up to you how much you want to work on this, how much 3 o'clock is not out of the question to get up. This is a great divergence. I would have taken that if I was up at 3 o'clock. In some places you are, some places around the world, this is not a bad time to be trading overnight markets. 3 o'clock. I wish I had it in me. Not anymore. Just finish off some fast scans. And that's basically what I want to do. I want to install that. You guys saying, all right, John, I see a divergence. What's the criteria? Low, lower low, much higher low. Boom. Look at the size of that move. I mean, yeah, you get a big pop here in the original, but your stop always goes in at the low. These things are going to take off. This was some news too. Looks like it was Tuesday, probably Fed meeting day. That's what it was. So lots of times news will happen too, but it's how many times do we see news and divergences play out perfectly? Almost every time. So, I mean, if I saw a divergence in there, I knew the news was coming out, it's probably a great sign it was going to reverse. And then, boom. I haven't found one that hasn't really been perfect. Wow. Oh, man. 3 o'clock here. You go out for a pitcher of margaritas after this one. You got a beautiful low. Moves up here, rolls over. Moves up, rolls over, turns back up. Boom. Goodbye. Perfect. 5 minute. Hey, case closed. You know what the job is. All right. So I got the Rockbot running here on the site. Plus the me breaking these down. Look for this next week. Next week I'm going to be concentrated on this. Also going to try to start a kind of a conversation more about this, kind of get a club going. This is important to me. I think it's important to a lot of people out there to have a way of actually making good income in the markets and not, this is a very logical, very scientific, very mathematical way of doing it. It works. It's the market is is a lure. It's a casino. It's you always want to get into something that's moving fast, and you just want. And sure, I do too, and I will always chase some things too. But this is the proper way of teaching right here. This is how people come up to me and says, what do I need to learn to trade? And I said, it was boring stuff. If you want to make money, there's one way. If you want to be a cowboy, try to get rich, and get your 1,000% gains on some things. Well, that's a different game altogether. So I'm not going to do that. This is great. This gives you the freedom to go anywhere in the world you want to go. You have to be disciplined. You have to be focused. It does not come easy. You have to control the demons in you, the greed, the fear, and once you're able to trade like a monk. You take the setups. That is, that's half the battle, taking the setups. I'll be there next to you, taking the setups. Feel free to join me every day on DayTraderRadio.com live. Like I said, I start the show about 8 o'clock. It's open to the public. We also have a membership area where everyone gets their own private dashboard. You have the chat rooms, chat, all my alerts, all the trades. School of Stock, the Rockbot, the Tradeometer, everything for the members is what you saw today. All right, so have a great one, and I'll see you in the markets. If you need any information, please, I want to follow this video. I want to try to get it, try to keep in touch with people. So if you have any questions, feel free to ask them. All right, and I'll see you guys in the market. DayTraderRadio.com